This is Rich with Rich on Money, and today I'm going to talk about investing with VA loans. Now, I've talked before about VA loans in general, but now I'm talking about investing with VA loans. VA loans weren't meant for investing, but I'll tell you how to do it. If you want a VA loan, you're supposed to prove that you plan on living in that house. So that kind of makes it hard to invest with VA loans, right? Well, not really. You can invest with VA loans very easily in the military because we move so much. So let's talk about this. There's an occupancy rule, right? There's an occupancy rule. You're supposed to live in the house within the first 60 days of buying, right? That's easy to do. So whenever you use a VA loan, let's say you get to an assignment, you use a VA loan to buy the house that you're going to move into. You want to make sure that the house you're moving into financially is going to make a good rental property when you move away. You got to make sure the 1% rule and the 50% rule all apply, and that property will be a good rental property that's going to make money, all right, for you as a rental when you move away in a year or 2 years or 3 years, all right? That's the first thing. But you're going to live there for a while, but you're going to move away because you're in the military. But here's another thing you can do. You don't have to buy a single family home, okay? You can buy multifamily with a VA loan. You can buy a duplex, triplex, or fourplex with a VA loan. And the second you do that, you are allowed to rent out all the other properties. You have to live in one of them, but you can rent out the other one or the other two or the other three. Not only can you rent them out, the lender is going to require that you have them leased out before closing. All right? This is a way that you instantly have rental property. You instantly are investing. You can also do something called house hacking. House hacking is when you, let's say you buy a fourplex, right? Well, you live in one, but you rent out the other three. The income from the other three might be enough to cover some or all of your payment on the one that you live in. Thus the beauty of house hacking. That can also apply to a single family home where you have 3 or 4 bedrooms. You rent out the other bedrooms and it might be enough to cover, your bedroom. That's kind of the rule of house hacking. Qualifying for a multifamily VA loan. By the way, if you like today's video on investing with VA loans, make sure you subscribe. Give me a thumbs up and tell me what you're doing with real estate. Each lender approaches the qualifications for multifamily VA loans differently. I'll tell you what Veterans United, a very large lender, does. They won't consider your potential future rental income from the other 2 or 3 or 4 properties. They won't consider that income towards qualifying for your mortgage unless you have at least a 2-year track record as a landlord or you use a property management company. Well, that's easy. Maybe you just got to use a property management company. You need the renters in the lease before closing as well. You also need 6 months of full mortgage payments as cash reserves in the bank. Now, with single family investing, you've got to be flexible because you got to live there first. You're going to move away after a few years. So you just got to make sure that you can hopefully live there for, say, a year. That year is not a written rule. You intended to live there, but if the military moves you a year or 2 years or 3 years later, then you're allowed to turn it into a rental, and that's not really your fault. Oh my gosh, the coolest thing about the VA loans, or one of the coolest things that people say, is that it's no money down. That's kind of true, but not exactly true. You don't have to come up with a big sum at closing because there's no money down in that sense. But nothing's free in life. There's something called a funding fee that you pay to the VA, and that makes up for the no money down. You're going to pay at least a 2.15% funding fee when you supposedly get no money down when you buy these houses. That 2.15%, it's a little bit easier because it gets rolled into the entire loan and you don't got to come up with it yourself. You just put it into the loan and it gets amortized and you pay for it month by month. That funding fee can sometimes be waived if you're a veteran receiving VA compensation for a service-connected disability. VA loans can be used for a number of things. Buy a home, build a home, improve a home, buy a manufactured home, refinancing. Loan limits. Loan limits are very interesting. The VA appraisal, I think I talked about this before, but if you're listening for the first time, when you use a VA loan to buy a property, it needs a VA appraisal. It has to be done by a VA appraiser. These VA appraisers are different than the appraisals you get when you buy a normal house from a bank. They care about different things. They care about safe, sound, and sanitary. That's kind of their guidelines. They're kind of a pain in the ass. I'm just going to be honest with you. They're a little more strict and hard to deal with than the typical inspector that does like an inspection when you buy a house and the bank wants an inspection done for the mortgage. Should you invest with a VA loan? It can be a good thing. It's a way to get a property if you don't have enough money for a down payment. It's a benefit for us military members to use. I want to encourage you to think about it. There are other ways, you can use a conventional loan if you have 20% down. There's FHA loan, which I'm going to write about soon. There are other avenues as well, but a VA loan's a very good one. Remember to read my post on real estate mistakes military members should avoid. Because if you buy a house that's going to make a crappy rental, you're screwed. All right. This is Rich Carey from Rich on Money. I hope this helped. Hit subscribe, comment, like, tell your friends, and have a nice day.